Markets often move before the news makes sense. Stocks rise when the economy looks weak. Markets fall even when headlines seem positive. Why? Because markets don't move on headlines. They move on liquidity. Liquidity is the hidden force quietly driving the entire financial system. When investors hear the word liquidity, many assume it simply means money printing. But liquidity is something broader. Liquidity is the capacity of the financial system to absorb risk. It is the availability of capital. It is the willingness of institutions to lend, and it is the ability for markets to handle large flows of money without breaking. When liquidity expands, markets breathe. When liquidity tightens, volatility appears. This is why markets often move long before the economic story becomes clear. Liquidity in the global financial system mainly comes from three places. First, central banks. When the Federal Reserve expands its balance sheet or lowers interest rates, it increases the amount of capital flowing through the system. Second, government spending and debt issuance. Treasury borrowing and fiscal policy can redirect enormous amounts of capital through financial markets. Third, the banking system. Banks, hedge funds, and large institutions constantly decide how much risk they are willing to take. When those institutions feel confident, liquidity flows into markets. When they pull back, markets suddenly feel fragile. This is why markets sometimes react in ways that confuse investors. The headline might be about inflation, or geopolitics, or economic data, but underneath the surface, the real question is always the same. Is liquidity expanding or contracting? If liquidity is rising, risk assets tend to climb. If liquidity is tightening, markets become far more sensitive to bad news. In other words, headlines move markets in the short term, but liquidity determines the direction of the cycle. Understanding liquidity helps investors step back from the daily noise. Instead of reacting to every headline, you begin to see the architecture of the system. And once you understand how liquidity moves through markets, you start to see why markets behave the way they do. Because in the end, markets don't move on news. They move on liquidity. If you want to understand the macro forces shaping markets and long-term wealth, subscribe to Weekly Asset Architect for new macro breakdowns every week.